Google parent company Alphabet reported Q1 earnings that did beat the street, but revenue fell short due to a slowdown in ad growth. It posted its slowest sales growth in 4 years as it faces more competition and continued struggles at YouTube, which is estimated to account for 15% of sales. First time since Q2 of 15, Jim, we've seen revenue sub 20.
Yeah, this is one of those quarters where most companies would say, look, it's a disappointment. We know we disappointed you. It's very interesting. The Wall Street Journal called it the poor results, yet people think you get 16%. 16% is not good enough for them. I wish they had been more humble. I wish that they had understood the frustration of the analysts. I wish they would learn to execute better. I wish they learned how to deal with the enterprise. They clearly haven't. I wish they'd figured out a way to temper expectations versus YouTube Premium. I wish I knew how much their numbers were softer because they have to clean up their site like Twitter did. I wish I understood what the hell they're doing.
That's a long wish list. A lot of the commentary this morning is, look, they did flag uncertainty in prior quarters, but it was so opaque, it was essentially meaningless.
Yeah, look, I wonder whether they're very hard to deal with from the enterprise base. They're very hard to deal with. Amazon's not. Amazon is really easy. Alphabet picked up the phone for many years and got orders. If they keep changing their darn algorithm and making it so hard to figure out, people are going to say, you know what? I'm going to write a check to Amazon. Because Amazon, Andy Jassy, Amazon Web Services killing it. Alphabet has to spend a fortune to keep up with Amazon and Microsoft, and they still may not be able to handle the cloud business because they're not an enterprise company. Was it disappointing? It should have been personal worst. You know, sometimes when you're a great athlete, what matters is, did you do well versus your own standards? But they're now holding themselves versus other companies. Yeah, look, we did well versus other companies. No. I mean, you know, I think the world of Ruth Porat, but I would have started by saying we did not do as well, like Mike Roman did at 3M. Now, you can say, well, Mike Roman really blew it. Alphabet didn't. But we all expected more. And video games, no, it didn't matter. The premium, where's the money, subscription business. I don't know. I finished that call and I just said, really? Yeah.
We did get one downgrade today. Stiefel goes to hold, 1287 fair value. And David, we do know that, I mean, at least for online shoppers, they're now starting their searches on Amazon more than they are search engines.
Amazon is a real player, although its continued ad growth decelerated, certainly, but it is obviously getting larger and larger, as we know from the earnings from Amazon last week. Listen, they missed by about $1 billion on the revenue line. EPS actually was better. EBITDA was okay at Google. You're looking at a stock down over 8%. Market cap basis, the numbers are going to be enormous, in part because this thing is so widely owned by so many managers who probably can't find anything better to own. You got guys who own it for value, other guys who own it for growth, and everybody's going to be suffering today. Jim, you could make an argument if this thing wasn't a 6 or 7% position for so many asset managers out there who apparently don't have any better ideas. It wouldn't be down 8+% today. It might be down a more muted 2 or 3%. But here you go.
Yeah, it ran 10% going in, which is always dreadful. But David, when you have a terrific CFO constantly answering, no, it's currency, no, it's currency, it's currency. They do have a big international business. What makes you feel like is like, no, please, don't be Nixonian. Come on, drop the Nixon rap.
I know, but Jim, also that same CFO, Ruth Porat, who obviously you respect a great deal, this whole idea of the timing of product changes and ads that can impact year-on-year growth rates. And you're going to lap that next year, but what exactly is she talking about? Do you know?
Well, that's exactly, David. When I finish, it's like my ma. My mom used to say, listen, Jimmy, if you don't understand it, maybe it's too hard to understand. Great credit. My father always said, if you don't understand, it's because you're an idiot. But I finished the call and I said, no, David, I'm not playing this time. And Dan, I like Ruth Porat so much. I wanted to say to Ruth, it's perfectly fine to say, you know what? We didn't do what we want, and we're going to come back and we're going to crush Amazon. But instead, it was like, hey, guys, currency. It's currency. I was waiting for her to say Brexit.
Well, it's also that
How about Brexit?
It's the decel in click growth too, obviously, to 39% from the 50s or 60s. But again, apparently these product changes may have had an impact. They think they're going to make the site better, clearly, and you're going to see a resurgence again once they sort of play through, Jim. I guess that's the point.
Well, look, I mean,
it's rare that we've seen Google down for any significant period of time. It always seems to come back eventually.
My childhood trust owns it. I'm sticking with it because I believe in Ruth, having just said all those bad things. I don't know.
Well,
Ruth, I'm sorry.
Pre-market market cap loss is about $57 billion.
Yeah.
And it's the spoke says it would be the worst gap down on earnings since '04.
You miss $1 billion, they take 50.
Yeah.
Wow. I mean, what would happen if they
take
beat
50.
it by $1 billion? David, it's discouraging because it's so opaque.
Yeah.
And do you think they know it's opaque? Or do you think that they really believe, you know what, we don't have to tell you anything?
I mean, I think it's a little of both. I feel like, listen, in the call, they provide a decent amount of information, Jim. I mean, in terms of at least metrics and numbers and sort of targets. But what exactly is going on in terms of the way that advertisers are using it and why click growth decelerated at such a rate? Agree. We could learn
and that's,
perhaps more that would help investors make a better decision.
There's not a retailer or consumer products company that didn't tell me they spent much more on the web. If that's the case, it seems like it didn't go to Google.
There's certainly that sense.
Yeah.